What if I told you the US dollar didn't just weaken after the latest Federal Reserve signal? It cracked. Not in a dramatic headline way, not with flashing alerts on mainstream TV, but quietly, structurally, in a way that seasoned traders immediately recognize as dangerous. Because when the dollar starts behaving like this, silver rarely stays calm for long. And what's happening right now could be setting up silver's next explosive move in a way most people are completely missing. Just days ago, markets were still pricing in strength, confidence, stability. The Fed was supposed to stay tough. Rates were supposed to stay higher for longer. The dollar was supposed to stay king. But then the signal came. Not a rate cut, not a big announcement, but a subtle shift in language, tone, and expectations. And that was enough. The dollar rolled over, bond yields reacted, liquidity expectations changed, and silver started acting differently. Before we go any further, if you follow silver, gold, or macro shifts like this, and you want clear, no-nonsense breakdowns without the noise, make sure you like this video and subscribe to the channel. It really helps the algorithm push this content to more people who actually care about what's happening beneath the surface. Here at Silver Shockwave, we focus on the moves that matter before they hit the headlines. Now, let's talk about why this Fed signal matters so much. The Federal Reserve didn't need to say, "We're cutting." All they had to do was hint that tightening is no longer the priority. Markets don't wait for confirmation, they front-run it. The moment traders sense the Fed is boxed in by debt, slowing growth, or financial stress, the dollar starts losing its edge. And that's exactly what we're seeing. The US dollar is a confidence asset. It doesn't fall because everything is fine. It falls when trust starts eroding. And lately, that erosion is becoming harder to ignore. Massive deficits, rising interest costs, foreign buyers quietly stepping back, and now a Fed that sounds more cautious than firm. Put all of that together and you get pressure. Not a crash, but a crack. And cracks are how bigger breaks begin. Silver thrives in this environment, not immediately, not always explosively at first, but structurally. Silver doesn't need panic, it needs imbalance. A weaker dollar makes hard assets more attractive globally. It makes commodities cheaper for foreign buyers. It pushes capital out of paper promises and toward tangible value. And silver sits right at the intersection of monetary metal and industrial necessity. What's important to understand is that silver rarely moves alone. It moves when multiple forces line up at once: currency weakness, shifting rate expectations, tight physical supply, industrial demand that doesn't slow just because the economy does. And right now, those forces are aligning in a way we've seen before, usually right before silver makes a move that surprises everyone. Look at how silver has been behaving lately. Pullbacks are getting bought faster. Dips don't last as long. Selling pressure feels thinner. That's not random, that's positioning. That's smart money adjusting before the crowd realizes the narrative has changed. When the dollar weakens after a Fed signal, silver doesn't ask permission. It starts setting the stage. And here's the part most mainstream analysts won't tell you. The Fed is trapped. They can't keep tightening aggressively without risking something breaking. And they can't cut aggressively without admitting inflation and debt are still a problem. That leaves them with careful language, delayed action, and reactive policy. Markets see that. The dollar feels that. And silver responds to that uncertainty better than almost any other asset. This isn't about a one-day move or a short-term trade. This is about trend shifts, big ones. When the dollar rolls over after months of dominance, it changes global flows. Emerging markets breathe easier. Commodities catch a bid. Precious metals regain relevance. And silver, because it's smaller and tighter than gold, often moves faster once momentum builds. At Silver Shockwave, we've seen this pattern play out again and again. The setup always looks boring right before it turns explosive. People lose interest, volatility compresses, headlines move on. And then suddenly, silver is moving 5, 6, 7% in a session, and everyone is asking what happened. The truth is, it didn't happen overnight. It was building quietly. Another key factor is positioning. Futures markets have been leaning heavily one way for a long time. When the dollar weakens, that positioning becomes uncomfortable. Shorts start covering. Momentum traders jump back in, and because silver's market is relatively small, it doesn't take much to create outsized moves. That's why silver rallies feel violent when they finally arrive. Now layer in industrial demand. Electric vehicles, solar panels, electronics, grid infrastructure. None of that stops because the Fed changes a sentence in a statement. Physical silver demand doesn't care about interest rate projections. It cares about supply, energy policy, and long-term investment cycles. And those trends are still very much intact. This is why silver reacts so strongly to dollar weakness. It's not just a hedge, it's a necessity. And when monetary confidence fades even slightly, silver benefits from both sides of the equation. That dual role is powerful, and it's often misunderstood. If you're finding value in this breakdown so far, hit that like button. It tells YouTube this content is worth sharing, and it helps more people understand what's really driving these markets right now. The next thing to watch is confirmation. Does the dollar bounce hard, or does it struggle? Does the Fed try to talk markets back into confidence, or do they stay vague? Does silver hold its recent gains, or does it shrug off selling pressure again? These are the signals that separate noise from real trend shifts. History shows that when the dollar loses momentum after a Fed pivot signal, silver rarely stays quiet for long. It may consolidate, it may frustrate traders, but once it breaks, it tends to run harder than expected. That's why patience matters here. Chasing headlines rarely works. Understanding structure does. This isn't about hype. It's about alignment. Currency pressure, policy uncertainty, industrial demand, and market positioning are all pointing in the same direction. And while nothing moves in a straight line, the risk-reward profile for silver changes dramatically when the dollar starts cracking instead of strengthening. As we move forward, pay attention to what the market does, not what it says. Watch how silver reacts on down days in equities. Watch how it behaves when the dollar tries to bounce. Watch volume. Watch follow-through. These are the clues professionals use, and they're available to anyone willing to look past the headlines. We'll continue breaking this down here in Silver Shockwave as the story develops, because this isn't a one-video event. This is an unfolding shift. And the people who recognize it early are usually the ones who benefit the most. Before you go, let me know what you think. Do you believe the dollar's weakness is temporary, or do you think this is the start of something bigger? Drop your thoughts in the comments. I read them all, and they help shape future videos. And if you found this useful, share it with someone who follows silver or macro markets. These conversations matter, especially right now. Stay sharp, stay patient, and I'll see you in the next one.